Hi, I'm Jerry Sparks, President of AG Financial Insurance Solutions, and we have with us Rich Hammar, Legal Counsel for the General Counsel of the Assemblies of God. And we're going to be talking to you church planners about the tax and finance issues that affect you as a church planner. So let's just talk about the dual status of a minister.
The dual tax status of ministers causes untold confusion. And the rule is essentially this. Ministers have a dual tax status. For income taxes, most are employees. But for Social Security, all ministers are self-employed with respect to their ministerial services. And so what that means is you do not have your church withhold FICA taxes from your pay. You have to pay your self-employment tax, which is the Social Security tax for self-employed workers, on a quarterly basis using the estimated quarterly tax procedure, which is not well understood still by a lot of ministers. So it's very important for you to understand that basic distinction. Most of you are going to meet the definition, the very broad definition of employee for income taxes. But for Social Security, you're self-employed. That's the dual tax status.
Let's just look at a couple of the commonly overlooked items of income that a pastor would have. So, you know, I'm thinking of they go do a speech and at another church, or they give a sermon at another church and they get a love offering for, $100, or they take up a donation and give it to the pastor, or there's a gift from their church and they just give them, here's the offering from today. Mm-hmm. Do they have to report that?
Yes, it's taxable. Whether the church, either of the churches you mentioned, maybe the pastor is visiting another church, or maybe it's the pastor's own church that gives this love offering. In either case, does the church have to report it as taxable income? Not if it's under $600 for another church. If you're going to another church to speak, there's no requirement that there be any reporting on a 1099 or W-2 by that church. Certainly the 1099, that's for self-employed workers, which would be the case if you're a guest speaker. If it's your own church, it's a little bit different. That takes up an offering at Christmas, Minister's Appreciation Day, anniversary, birthday, etc. Those are almost always taxable as well. And the church should reflect that on your W-2 or 1099 that you issued at the end of the year. But the main thing I want to emphasize here, which is constantly, there's constant confusion over this, and that is that love gifts are not tax-free. I know that comes as a shock to many of you, but love gifts, because what are they? They're additional compensation for services. And when you link the payment of income to the performance of services, that makes it taxable.
Are there penalties if they do not report all this?
Well, there are potential penalties, negligence penalties for failure to properly report your taxes. There's another penalty that can exist to any fringe benefit that's taxable, that's provided to a minister that's not reported as taxable income, either by the church or the minister, him or herself. And those are called the excess benefit transaction penalties, or sometimes known as intermediate sanctions under Section 4958 of the tax code. And the basic idea here is this. If a church provides a taxable fringe benefit to a minister or a member of the minister's family that is not reported as taxable income by either the church or the minister, that triggers significant penalties that can be up to 225% of the amount of the unreported income. Let me mention some other items of taxable income that ministers sometimes do not report as taxable income, either the minister or the employing church. So those would include special occasion gifts, like at Christmas, anniversary, birthday, etc., whether you call them love gifts or not. Retirement gifts are almost always taxable. Social Security paid by the church. Personal use of a church-owned vehicle is a taxable benefit that must be valued and reported. We're not going to go into the weeds here or the details. I just suffice it to say I want you to be aware of areas of potential trouble. Non-accountable reimbursements. If your church reimburses your business expenses under a non-accountable arrangement, meaning you're not required to account for the business nature of that expense, that's a taxable benefit that needs to be reported as taxable income. Let's see, oh boy, here's a big one. Reimbursement of a spouse's travel expenses. Well, I want my wife to go with me to district council because, or to some denominational meeting because she wants to visit family and friends, and that's fine, but that's a social engagement. That's not a business expense. Below market interest loans, very common in churches to make a loan to a pastor, oftentimes an associate pastor, youth pastor, to help with the down payment on a home. That is, if there's an interest rate that's either no interest or low interest, that generates a taxable amount of income that must be calculated and reported. Debt forgiveness is taxable. That's income. It's as if the church handed you a check for the amount of the debt forgiven.
There are some special rules in the tax code, I believe, in the federal tax code. Can you talk a little bit about what those special rules are in regards to a minister and ministry?
There are 4 special rules in the tax code that pertain to ministers. And you're familiar with some of these. For example, ministers are eligible for a housing allowance. By the way, the housing allowance is an exclusion only for income taxes, not for self-employment tax. You do pay self-employment tax on it. Number 2, ministers are exempt from income tax withholding. So you pay your income tax and self-employment tax using the estimated quarterly tax procedure, unless you request voluntary withholding from your church, which some ministers do. Number 3, self-employed status for Social Security, as we've seen. And number 4, you potentially are eligible for exemption from self-employment taxes if you file a timely exemption application, which is basically 2 years from the time you are first credentialed, whether that be licensed, certified, whatever that status is. The first ministerial status, 2 years. It's a little more sophisticated than that, but that's the basic idea. You have a time during which this application for exemption must be submitted, and it must be based on your opposition, your religious-based opposition to receiving public insurance benefits, including Social Security, not payment of the tax. So the bottom line, Jerry, is there are very few people, in my opinion, that actually qualify for this, and yet about 1/3 of all ministers have applied and obtained exemption. So those are the 4 special tax rules that apply to ministers.
Let's talk a little bit, because so many pastors use the housing allowance, and I know that there was a recent court case where people are fighting that it is discrimination because other groups do not get the housing allowance and ministers do. So do you think that's for the long haul, or do you think they're going to chip away at that?
Oh, they'll chip away at it. I have no confidence that the housing allowance will survive because, like you say, many other organizations, including charities, don't get the housing allowance. This particular organization of atheists that filed this lawsuit challenging the constitutionality, one of their points was, hey, our officers don't get a housing allowance from our atheist organization. And so that's percolating now in the federal courts. And I hate to say it, but I don't have any confidence that a judge, that they're not going to find, if they forum shop for a judge that's most hospitable to them, this atheist group, that they're not going to find one. And then it goes to an appellate court. I don't think it's going to go all the way up to the Supreme Court, but a federal appeals court will make a determination. And the IRS generally applies appellate court decisions on a national basis. By the way, there are a few other professions that get a housing allowance: military and State Department employees, which are 2 significant groups. Minor children, they get free housing from their parents. So that's a big group. But I don't think the basket's going to be big enough. The atheist judge there that ruled the housing allowance was unconstitutional, she's probably agnostic at least, she commented on this and said the basket of recipients of a housing allowance is too small, too truncated.
Let's just talk about the substantiation rules for charitable contributions, because so many of our people are donating money to churches, and what are the rules there for charitable contributions?
Well, let me just emphasize here, Jerry, that if you fail to meet the requirements, and technically these requirements are for the donor, not for the church, but donors are going to blame the church if the IRS denies a charitable contribution, because why didn't you tell me what I needed to do? So I think it's very important for church leaders to know these substantiation rules and to be sure the donor has information that can be used to make sure there's compliance with them. Any gift of $250 or more is subject to heightened substantiation rules. And those include a statement to the effect, and by the way, this is individual gifts, not accumulative. Somebody gives $10 a week to the church, that's $500 a year. That doesn't trigger the $250 substantiation requirements. It's got to be individual contributions of $250 or more. The most important thing is your receipt that you provide to that donor must have the magic language of no goods or services, if this is true, no goods or services were provided by the church in exchange for your contribution, other than intangible religious benefits. That's the magic language that's got to be included on receipts. This is not just some technicality that can be ignored. It's talismanic. It is absolutely required in all cases of gifts of $250 or more. The second issue that you need to be familiar with is the requirement that any gift of property valued at more than $5,000 by the donor is not deductible unless the donor gets a qualified appraisal and fills out what's called an appraisal summary on IRS Form 8283 and attaches that to the tax return claiming the deduction. The church has to sign that form, by the way, on Part B, Side 2. So, boy, there have been so many cases, Jerry, of people that have lost large charitable contribution deductions for huge amounts because they didn't know they had to get a qualified appraisal or put in a qualified appraisal summary, Form 8283, in their tax return. Nobody told them. It's their responsibility. Most of these people have tax return preparers, but it never comes up in many cases. So I've seen cases where property valued at $500,000 given to a church, no deduction, because you didn't get the qualified appraisal. The IRS even conceded in these cases. Yes, we believe that there's no question that the donor made the contribution, but you didn't comply with the rules, and so you don't get a deduction. So, Pastor, you're the sentinel at the door. You're the one that's got to send the warning to when somebody's giving a car, jewelry, house, land, and non-cash property valued at more than you think. If they're going to claim a deduction of more than $5,000, let them know. Get them a copy. Download the current copy of IRS Form 8283 and the instructions, which is a separate document from the IRS website, irs.gov. Give it to that donor and say, you need to be familiar with this information. Take it to your return preparer if you've got one. At a minimum, you need to do those things.
Talk a little bit about discretionary funds and some of the issues there.
Many churches have discretionary funds where they just tell the pastor, we have this account, you can use it for whatever you want. Do you know that is taxable income to the pastor? Because under what's called the constructive receipt doctrine, any money to which you have a right to access, whether you do so or not, becomes taxable to you because you have the right to do so. So it's very important in terms of risk management here to have a policy the board adopts that puts boundaries on this fund, that only distributions can be made by the pastor to cases of need that cannot be related to the pastor. It can't be for the pastor's benefit or members of the pastor's family. Number two, there's got to be some accountability in the process, that somebody, the board or a committee of the board, has to review every distribution from that benevolence fund to ensure that it's going to a legitimate religious exempt purpose of the church.
A lot of churches file for a 501c3, and sometimes the IRS takes a long time to actually give the 501c3 status. What is the consequences of not being a 501c3?
Well, Jerry, 501c3 is a section of the tax code under which public charities are exempt. That includes religion, charity, educational, scientific, historical, et cetera, et cetera. In that basket are included religious organizations, including churches. Keep in mind that unlike virtually any other charitable organization, churches are automatically deemed to be exempt, tax exempt under the tax code, under section 508A1. They don't have to file an exemption application with the IRS. They're presumed to be exempt. So it's very important to know that churches don't have to get recognition of exemption. They're automatically exempt. But it sure helps to have IRS official recognition. That can come about in two ways. Number one, you apply for your own recognition of exemption by filing a Form 1023 with the IRS. Or secondly, you come under the group exemption of another organization. Many denominations have group exemptions and that apply to every affiliated organization, so they don't have to apply for it. And the biggest advantage of this is when a donor to a church, the IRS audits that person and says, we're auditing your charitable contribution deductions. And who's this church that you're giving to? And so it's desirable to have your own independent exemption or come under a group exemption, so you can just say, we're under the group exemption of XYZ denomination, and that makes it, clearly, it avoids the problem with the IRS questioning the deductibility of that contribution.
Well, Rich, thank you very much for your time. We tried to hit the top issues affecting finance and tax with your church being a church planner. If you have any other questions, feel free to email us. We'll be glad to answer them. Rich, thank you for your
Thanks,
time,
Jerry.
and we appreciate you watching us.